All right, everybody. Well, I hope you can hear us loud and clear. My name is Evelina Czapla. I am with the Digital Power Network. I'm the Director of Energy Policy at the Digital Chamber, and the Digital Power Network is our Bitcoin mining affiliate. We are a national trade. We represent the Bitcoin mining industry in Washington. And as you can imagine, we've got a lot of work ahead of us. So we're excited to talk about that and everything else to come, all things wholesale power markets. So I'm going to turn it over to our panelists. I'd love if you guys could just introduce yourselves, give us a sense of what it is that you do at your organizations, and how it is that you interact with wholesale power markets.
Sure. Hi, everyone. Wow, this feels so intimate going straight into your ears right now. But my name is Samantha Robertson. I'm the Director of Global Energy Strategy at Bitdeer. Bitdeer is one of the largest Bitcoin miners in the world, and we have over 895 megawatts of data center capacity online. And I am a one-woman show. I procure all the power and implement all the optimization strategies to get our power price as low as possible across 3 dairy regulated markets globally. And I'm very excited to be here today.
Hey, Chris Nin with with Mara. My background is in energy commodity trading, so trading, running trading desks, optimizing thermal, wind assets, solar assets. At Marathon, I run our trading group, and we have some people underneath us as well. We primarily trade bilaterally, like with ISDA counterparties, on ICE through OTC brokers, and then occasionally we'll do some stuff with our actual supplier who supplies energy to our facilities.
So you guys have had plenty of experience on the front lines interacting with the electric industry on behalf of Bitcoin. Over the past year, in my current role, I've gotten to see really how the industry is perceived in Washington, and I'm curious how the industry is perceived within electric markets and how that's changed over time, if it has.
Yeah, I can jump in. So I joined Bitdeer in 2021, and it was at the twilight of the last bull market. So learned pretty quickly what it meant to go from good times to the bad times. And I think that that had a pretty tremendous impact on how Bitcoin miners are perceived in power markets, most notably because over the course of 2022, Bitcoin price plummeted and natural gas prices substantially rose globally, which was a perfect storm for compressed margins for Bitcoin miners. Unfortunately, we saw some of our peers default, and I think that led to a lot of apprehension. But at the same time, ERCOT, the ISO in Texas, took it upon themselves to study large flexible loads, which are Bitcoin miners, meaning our load profile is not flat, but can actually be curtailed pretty quickly given a wide range of parameters. And I think with that, they saw that our loads can be a strategic asset for grid reliability. And so on a commercial side, there was apprehension, but there was a really concerted effort to see how flexible loads can be important in the tapestry of the grid. And so I think with that and some creative credit arrangements, and of course Bitcoin going back up again, I think in wholesale power markets we're seen as a very interesting, kind of like a dance partner, because we can sell options on some of our forward power and kind of cover short positions for traders in a really unique way that a lot of other loads cannot do.
Yeah, and I'd say that in general the mining and Bitcoin is like the industries have really matured. It's got like a lot more positive attitude these days. In the past, I really feel like most people felt like people in this space and Bitcoin itself, it was just full of domestic and international fraudsters, con men. The business dealings were illicit, this, that, and the other thing. And so we've moved from that to where, and then, now there's a bit of a focus on like, hey, like she said, these are great assets. These are great assets for a grid so long as they're managed properly. And as more and more of these flexible loads have come on, the grid operators have had to actually deal with them too. It's like, hey, we need a concerted effort or more visibility into how these loads actually respond to market prices or whatever else that they do, so that we can manage it. Because like if everybody comes off at the same time and they don't see that coming, then that can have effects on frequency and trips and everything else, and so it cascades. So that's one of the things that I think that they really realize and they're trying to manage is like, hey, what a great asset. And how can we use this without it being detrimental to everybody? And so I think it's really I feel like it should be very much invited into all the ISOs. I kind of feel like people who don't understand it or whatever, they kind of pick on us even still, but like it's like everybody doesn't operate the same, like, right? Yeah. I may have operational constraints, which I may have to provide certain notices, or equipment restraints where I can't do things as quickly as somebody else. On some of our properties, we can curtail like instantaneously on price signals. Others, we need to like provide several hours notice. Others, because we have a hedge, we may choose not to do it at all. So, I think that they were misconstruing like how people operated and just put everybody into one big basket and just said, hey, this is a problem, when in fact it's not, and they should really work with all of us, because we're super helpful for the grid.
Yeah, it's great to hear that the message is getting through that we're an asset and it's a benefit to the grid that we are flexible. It's something that we, I think, need to do a good job of spreading to folks broadly, not just the grid operators, but the community at large, because there are, obviously so many changes happening to the grid right now, right? We're seeing the dynamics shifting. We're bringing more intermittent resources onto the grid. And at the same time, we're creating a lot more demand shift throughout the course of the day by electrifying everything in sort of the pursuit of all things clean energy transition. We're seeing a lot of narratives around resource adequacy, whether or not we're going to have the power we need on the grid to meet all of these demands with this intermittency in mind, right? So, we're, I think, part of that picture, that load growth picture that folks are talking about, along with, of course, your AI data centers, your HPC, and broadly onshoring manufacturing, again, electrification. So I'm curious if, that shift in demand, all of these additional large loads coming on, has also impacted what you do on a day-to-day basis and how it is that you procure power, if there's any constraints there now.
I mean, I would say, for us, like, so the AI loads, for the most part, pretty flat. And again, this goes back to us being kind of the same but complementary to the market. So, I mean, we can, if we choose to, in operation, if we can do it, we can be flexible. So we can also like hedge differently than some of those other groups can, from balance of the day, to next day, next month, whatever. And then we can modify that a lot where we have that flexibility. But as far as like, the load and the perceived load that's coming on, I mean, I kind of feel like the market still doesn't really know how to, like, where that's going to be. I mean, I haven't seen like a big blow up. Like a lot of the AI loads not going to come on till later, but I haven't seen the back end of like the power curve or the gas curve like really go up. And as a matter of fact, I mean, it's kind of backwardated, honestly. So you get to a flat level and it kind of goes down. So, I think, everybody's just trying to kind of sort of figure it out.
Yeah, I agree. And I think that, in most grids in the U.S., it's a stakeholder process, which is great. But every stakeholder has a different interest. And a lot of them, I think, are worried about all of these changes happening. And where I see it impacting wholesale power markets is that some of the regulations or the tools that are being implemented for resource adequacy are exacerbating prices in some cases. In ERCOT, there was a new ancillary service that debuted in the market, and we saw that it created artificial scarcity that actually pushed up forward prices. And so this past summer, we didn't hedge any additional power, and it ended up being the right call. Obviously, it was bearish, but there was a lot of just artificial scarcity priced into the market. And I think what we're seeing in PJM is it's a capacity market, which means that the ISO incentivizes generators to be online for a certain amount of megawatts throughout the year by paying them in advance. And PJM actually changed the approach for this past year, and it actually made it seem like a lot of generation was offline, but it actually is just the rating of different power plants is lower, and so that pushed up prices quite high. And there are ways to manage those costs, but I think that to Chris's point, nobody really knows what to do, and so sometimes you try something and it might not work out, but I think that because there's so many voices in the room, it's going to be a challenge. And I do think, to the credit of our industry, we have made it so that we do have a seat at the table.
It's really interesting to hear about how your experiences vary from one area of the country to the next, sort of one service area, one jurisdiction. We hear a lot about ERCOT, they're definitely ahead of the curve with the large flexible load program, giving that some, deep thought, I think, before anyone else has. I'm curious, when you're dealing with all of these uncertainties and all of this projected growth, how you weigh choosing one service area over another? What factors do you consider? Why go to one part of the country versus another?
I mean, I would say generally we focus on price. So that's where you're gonna start, and then you look at other things like, hey, what's the landscape like? What's the regulatory certainty there? What's the ISO like? Are they just changing some of their procedures or programs in short time frames without really doing tests on it? And like she said, I mean, the ECRS really created false scarcity in ERCOT 2 summers ago, and it was a very hot summer too, but it did create a lot of super high prices, which we did not see again this last summer. So she made the right call. We made the right call too. We did the same thing during that period.
Love that for us.
But yeah, you look at other things too. You look at what's the weather like? Hurricanes, tornadoes. Is it too rainy? Is it too dusty? Things that I think really help us in our industry, opposed to maybe AI and some of the others, is that we can be remote. We can be far away from just about anything and operate, as long as we can pull up some internet from Starlink or something, or you can have the cable, the fiber in there. So you look at I feel like we look at all those things and how we can complement the market. Yeah.
Yeah, I agree. I think it's a pretty complex process to select a site, but we're power traders, so I always think it's preferable to be in a market with trading instruments or levers that you can pull to control the price, because we do have that operational flexibility that we can leverage in service to that.
And I would just say, even in ERCOT, you might look at Houston, Northwest, or whatever. We would operate our facilities differently, in the north zone than we would in the west, just based on the amount of congestion and so forth and so on. So for us, we look at, hey, what can we do there? How can we maybe make some money off ancillary services? If we can bid those in, how can we manage sort of that basis spread? And basically just try to bring down our overall cost of energy.
Mm-hmm.
So you raised a point that I think it's interesting. We've heard over the years that when it comes to resource adequacy, grid congestion, the summer was always most problematic, right? Largely because we're all turning on our air conditioners, and that was typically a very large demand on the grid. Recently, we're hearing that resource adequacy in the summertime, I think in part because of solar, is no longer an issue. It's actually in the winter now that folks are concerned, right? And that question has really shifted, I think, geographically as well, right? In the winter in the north, we're now concerned about resource adequacy rather than in the summer in the south. I'm wondering if you guys have seen any of that play out in your transactions.
I mean, I don't want to.
Yeah, go for it.
Well, I would say that ERCOT has always had kind of a double peak in the winter anyway. I think what's going to exacerbate the problem for us now is how we've continually gotten more reliant on solar, and so the solar hours are going to really be decreased in the winter. And so up until recently when they passed the Texas Fund and people started like saying, okay, we're going to build thermal assets, we've continued to rely more and more on the renewables, which leaves in a hole. I mean, like if ERCOT misses their wind forecast or their solar forecast, I mean, like today, we probably have, maybe today's not a good example, but like we're like running like 20,000 megawatts of solar during the day, and then when the wind's up, it's probably 25. So I mean, that's 45,000 megs, and our load right now is like 50,000. So I mean, the more that you get reliant on that, the more that you need backup support, and that's what we've seen. Like this, you've seen like the peak hours from a demand standpoint in the summer were like 17 to 18-ish in the past, and now it's still the demand peak, but the dollar peak shifted over because of the solar dropping off and the ramps down, and it's very hard for ERCOT to meet that intersection a lot. So now your hours in the summer, hours of 2021 are your peak pricing hours, and like right now our peak pricing hours is 18. So you've seen sort of those shifts in the past. I don't really remember people really trading hours. I mean, we've traded like strips of hours, and so that's helpful because that just opens up a lot of different markets. But like during the day, it's just soft. And so, I think again, like because of the solar, that's just put a lot more pressure on wind and the other assets going into the winter. And if we have an event, it could be pretty interesting.
I've joined the power market game after Winter Storm Uri, which was the catastrophic winter event in 2021. And so I've only known this really apprehensive kind of PTSD market world in the winter. And I think that one thing that cannot be understated in ERCOT especially is the impact of batteries, which were not as heavily saturated in 2021. And what we're seeing is that they have brought a lot to stabilize price volatility, and you can never rely on one single solution. And yeah, I do think having additional gas built will be helpful, but of course you need to make sure that the midstream infrastructure is also winter ready. But I do agree that it is kind of changing pricing peaks, but again, that makes our loads and our flexibility most attractive because we can sell hourly options or do transactions in a much more granular structure than the fixed shapes that are most liquid in the market right now.
I'll jump in real quick. Like so on Uri, we didn't have the batteries, but I mean that was it was an anomaly. I mean, it was a super cold event that came through, and the temperatures kept getting colder and colder. I mean, they saw it coming for like a week and a half, but then it just got colder and colder every day. So the batteries would have worked for about 4 hours, and then that's it. I mean, they're not recharging. I mean, we were zipping at $9,000 a megawatt, and so none of that would be helpful. Like us being able to shut off would have been helpful too. That may have helped. Them having to do blackouts, which is what we had.
Yeah.
And there was also issues too of bad planning. Like a lot of the gas plants didn't apply as critical load facilities, and so they got cut off. And they're like, "Hey, where's your electricity?" And like, well, we're not getting the gas. And and so it was just a big debacle. And we didn't winterize, and that was I can understand why we didn't do that or whatever. But batteries are a great solution. But we're better. I mean, because we can last longer. We can be off. We can if we're behind the meter and we're at a solar facility or a wind facility, not only are we not consuming, but we can push those megawatts onto the grid as well. So I just think we're a great load resource. Yes.
You've both touched on something that I think is a really critical piece of this, which is sort of what you'd like to see happen on the grid, right? Like you'd like to see additional resources, or you'd like to see ability to do certain activities, and all of that really kind of comes down to the regulator, right? Like what can you do in each marketplace, and to the grid, to the market operator, right? They'll have their own terms and conditions that you're obliged to apply to. So I guess as these dynamics shift, as we're seeing more large loads come on, as we're seeing this tenuous resource adequacy, what would you want to see from regulators or market operators? How should they approach this from your perspective?
I mean, one, for me, I feel like just, again, learning more about how like our load can be complementary to every grid. And, it wasn't too long ago that, they wanted to preclude us from being in ancillary services, or they wanted us to, do ancillary services but not pay for it. And like they were sectoring out like our industry, and it's like that's not fair. I mean, like for number one is we're offering this into the market just like everybody else does, but we actually have the ability, not the obligation until we sign up, to be flexible. And so by us offering it at low to maybe $0, we're offering very reliable ancillary services, and that brings down the cost of ancillary services, and like I said, it makes it more reliable. For me to drop load is pretty consistent. It's pretty reliable. Like if I'm not doing that and they have to like hit on a thermal peaker, it may or may not come on. I mean, like they have the obligation to, but like you don't know. I mean, that's not running all the time. And so, I think for them it's just like, don't pick on us, embrace us and help us help them. And I think that will go a long way. And I do feel like that sentiment has changed. I mean, I do feel like even the heads of some of the ISOs are like now pushing on the PUC, and saying, hey, like, there's a lot of attack coming from the legislatures or from the, from the media or whatever. We actually like this. So.
Yeah, I think that Texas is very unique. It's definitely, it is the best place to do business in a lot of ways. And for our business, ERCOT is the easiest ISO to deal with in the U.S. by far. And so I think that one thing that they've done is they've just approached it with curiosity. And at the same time, they, are technocrats, and it's a good thing. We need to have consistent operations on the grid. But I think going back to the stakeholder process, it's about making sure that everybody involved feels seen and heard, because you think about some of these stakeholders in particular, they've had power literally for a long time, and it's not necessarily in their interest to change or to adapt. But I do think that we just have pretty much limitless opportunities. And for me personally, I think distributed resources are really interesting. The concept of virtual power plants and what a Bitcoin miner can do is economically bring a lot of resources to benefit all the participants in a VPP at scale. And also, of course, from a reliability perspective, the curtailment is consistent. And yeah, it's just at a scale that I think load resources haven't been able to contribute previously. So I'm definitely optimistic. I'm also sympathetic. And, for us, we're focused on the commercial side, but understanding the regulatory landscape and changes is completely critical to how we make decisions as well.
The novelty is, something that I think is not necessarily unique to us as far as the load size and flexibility. I think like virtual power plants are like the first thing that comes to mind. They're in a very similar situation. There's also a lot of education to be done there. While they are equally as prolific as us across the country, there's still a lot of questions that need to be answered. And I think, again, regulators, grid operators are still figuring out how to properly implement that resource. With that broader lens in mind of all these stakeholders at play, I guess, who do you think is most important for us to engage with moving forward so that we, can succeed essentially in this market?
I'm interested to hear what you say, but I think that the transmission utilities are probably the most important ally, but also the potentially where the biggest tension might be, because I think and I don't necessarily know if this is the right answer, but when you have a flexible load resource, there is a question of whether you can incorporate that into transmission planning models, and brings a lot of questions about how market structures can support that. But I think something like that is very interesting in managing congestion and also resource adequacy, and that would be something that is totally novel. And I think, again, for these are institutions, hundreds of years old, or 100 years old. And so, to convince them that this is a alternative solution, I think is going to be challenging, but very necessary.
I mean, I think it's just across the board education and everybody working together. I think the biggest problem is just like misinformation or low information or whatever. On the utility side, they need to figure out a way how to incorporate flexible loads into their transmission planning, which they don't. And they should. And to me, it doesn't seem like it would be that difficult to do. But this is a big old machine. Yeah. It's hard to change the direction. And then another thing, which I don't want to say too much on this, but the transmission providers, distribution providers get paid based on demand, so forth and so on. And so I think that's another thing that they're kind of looking at, just going, wow, these people can really shut down, and I'm not going to get any money from them because they're like a restaurant now. They drop their load and during the peak times, during the CP, which is super helpful for the grid. But then you have that one faction, which is the utility, and saying, hey, wait, I want my money. Wait, where's my money? I've got this 200 megawatt thing, and it's I charge him like he's a restaurant on the demand. So, so that I feel a little bit of rumblings kind of on that side, and I think it's fair to be fair. So we'll see sort of how that goes. But again, that goes back to any kind of the regulatory or uncertainty. So you got the state, the counties, the city, the utility. The ISO, there's just a lot that goes into it, just in general, trying to pick a spot, and then you hope that you get it right, and if you get it wrong, that they're really slow getting to where they want to be.
You're really hitting on all of my Washington talking points: regulatory uncertainty, slow processes. I couldn't agree more that the utilities and operators that we're interacting with, to your point, are mired in a century's worth of regulatory tradition, and it is so hard to get folks to break out of that. We're not the only ones who have that concern, which I think is a good thing, right? It's a broader issue that applies to other folks, and so hopefully change is around the corner. We've got a couple minutes left here, so I want you, I guess, each to just sort of provide what it is that you think folks should take away from this conversation.
I guess for me, I would just say, the reason probably a lot of people are here is just hey, what can we do to maybe lower our cost? And so, I feel like in our space, there's optimization, and then there's trading on top of that. And so, there's a lot more that goes into trading, just being very active in the short-term, long-term markets where you can trade around your position, and then asset optimization, which you can, on both of those, you can employ a third party to assist you, which obviously they're going to want a fee or sharing an agreement. But that can be as simple as just curtailing, being able to curtail on, price signals in real time or in very short notice, and just managing your costs that way. That's more optimization. And then as you move further and further beyond that, you can actually add money, which will help decrease your overall costs. So I guess that's what I would say. I did say that.
Oh, wow. Parting wisdom. I would just say, if you don't know a lot about power markets, you can learn. I did it in 3 years, and I think there's a lot of opportunity, and I think it's really important that if you are curious to throw your hat in the ring, because all of the changes that we're going to talk about, it's going to require a lot of diverse perspectives and ideas, and don't be intimidated. It's really not rocket science. It's literally not rocket science. So, yeah.
Yeah, definitely from the optimization side, that everybody can do that. The further you get on the spectrum, the more complex it gets, and you start talking about options and the managing around your options and all that other stuff. But yeah, you can start easy and kind of grow with that. But to trade, you're going to have to set up ISAs, and you're going to have to get a FCM and get qualified in that respect. But you can work into that.
What I'm hearing is Chris is willing to mentor anyone in the audience who would like to go into power trading. Uh, but thank you guys for answering my questions. This has been a lot of fun. And thank you for TBC and Lee for having us here. It's wonderful to see so many friendly faces, and it's wonderful to see you all.
Awesome.
Yeah,
Thank you.
thanks, Evelina.